On Friday, November 14th, 2025, the crypto market was shaken by a wave of panic triggered by rumors that Strategy Inc., formerly MicroStrategy, had sold 47,000 bitcoins, a move that, if true, would have marked the company's largest liquidation since it began its Bitcoin accumulation strategy in 2020. The alleged sale, first circulated by influential X accounts like the well-known Walter Bloomberg, quickly spread across social media forums and especially YouTube, where sensationalist videos titled, "The Truth Behind MSTR's Sale," or "Is Strategy Selling BTC? End of HODL," began drawing thousands of views per hour. The panic intensified when data from Arkham Intelligence started circulating, suggesting a sharp drop in Strategy's Bitcoin reserves from approximately 641,000 BTC to around 587,000 BTC. Gah! A difference of over 54,000 BTC. With Bitcoin trading near $95,000, this movement would represent a $5 billion reduction in the company's balance sheet. For investors already sensitive to market volatility in that same day, Bitcoin fell 5.9%. Its steepest drop since August. The news was interpreted as a sign that even Bitcoin's most prominent institutional advocate might be losing confidence. However, Michael Saylor, executive chairman of Strategy, immediately and firmly debunked the rumors. In a direct reply on X, he wrote, "There's no truth to this rumor." His response was as swift as it was unequivocal, reaffirming a stance he has held for over 5 years. Strategy does not sell Bitcoin. X itself partially validated the correction by attaching a community note to the original post, highlighting the CEO's official denial. The confusion, however, stems from a technically understandable but often misinterpreted phenomenon. What many retail analysts mistook for a sale was, in fact, an internal wallet reorganization, standard practice for major crypto holders to reallocate assets between custody addresses, especially during security upgrades, regulatory adjustments, or in preparation for new operations. The blockchain is public, but not every transaction implies an open market sale. In fact, Strategy reaffirmed its conviction precisely during this market dip. It announced the purchase of an additional 487 BTC for $49.9 million, directly contradicting the liquidation narrative. This behavior aligns perfectly with Saylor's long-standing philosophy. Summarized in a single word he posted just days earlier, HODL. Historically, the company has sold BTC only once, in December 2022, and not out of financial distress, but for tax loss harvesting purposes. The speed at which the rumor spread reveals a broader phenomenon in the crypto ecosystem: over-reliance on on-chain data without context. Platforms like Arkham Embark and Look and Chain offer powerful tools, but they require qualified interpretation. An address that disappears from public tracking doesn't mean assets were sold. They may have been moved to non-tracked wallets, multi-sig setups, or even institutional custody solutions like Coinbase Custody or Fidelity Digital Assets. Moreover, the episode highlights the market sentiment's fragility during corrections. A single rumor without credible sourcing can trigger an emotional sell-off cascade, especially when it involves symbolic figures like Saylor. This creates a perfect environment for short-term manipulation, where large players can exploit retail panic to accumulate assets at a discount. It's worth noting that there is no evidence of an actual sale. No significant BTC inflows into centralized exchanges linked to Strategy. The company's cash flow remains solid, with a $60 billion market cap and continued access to capital. Strategy's debt structure, BTC-backed, does not require sales to meet margin calls, thanks to protective contractual clauses. In summary, what occurred was not a sale but a stress test for market maturity. While novice investors react to screenshots and alarmist headlines, more strategic participants understand that on-chain movements require contextual analysis, not impulsive reactions. And at the center of this storm, Michael Saylor maintained his unwavering stance: accumulate, to communicate clearly and never succumb to noise. Therefore, rumors of a 47,000 BTC sale are nothing more than fake news amplified by volatility and the hunger for dramatic narratives. The truth, as always, lies in the facts, and the facts show that Strategy not only did not sell, but continues to buy. And for those who understand market cycles, that is the most important signal of all.